Good day, everyone. Trust you're doing well today. Today, we're talking about if you should buy land or invest 20 million naira. Now, somehow or some way, you have 20 million naira today, and you ask yourself, how do I make this money grow? What would you do? If you're like most Nigerians, your answer will probably be buy land. After all, we have all heard it before, right? Land never disappoints. God isn't making more land. You can never lose money buying land. But then again, there is another group of people, they will say something completely different. They will tell you to put that money into stocks, treasury bills, and mutual fund because your money can start working for you almost immediately. So, who actually is right? Today, we are going to settle one of the biggest wealth debates in Nigeria. Should you use 20 million naira to buy land or should you invest it in Nigeria stocks or mutual fund? And here's the interesting part though. We are not going to argue based on emotions or family advice, right? We are definitely going to use numbers. We are going to include one hidden cost that many people forget. And by the end of this video, you will understand why many wealthy people don't actually, think the way most Nigerians do. So let's get right into it. Before we compare anything, right, there is one important word you should understand, and that is liquidity. Liquidity simply means how quickly you can turn something into cash. For example, money in your bank account is very liquid. Why is that? Because you can transfer it right now. Treasury bills are also fairly liquid because they can usually be sold or mature within a known period. Stocks are liquid too because on most trading days, you can sell them through the stock market if there are buyers. Now think about land. Can you wake up this morning, decide to sell your land by lunchtime and have your 20 million sitting in your bank account by evening? Probably not. You need to first find a buyer. The buyer has to inspect the property, right? Both of you negotiate the amount. Lawyers will prepare documents before money will finally change hands. Sometimes this process takes months, sometimes even years. Now that's called illiquidity. An illiquid asset is simply something that takes time to convert into cash. Neither liquidity nor illiquidity is automatically good or bad. It depends on your goal. Now let's see what happens if you actually invest this 20 million naira. Scenario 1, you decide to buy land. Let's assume you find two plots selling for 20 million naira. Most people stop their calculation there. But that's not how buying land works. Buying land comes with hidden costs. First, the agent wants a commission. In many property deals, that's around 5%. 5% of 20 million naira is 1 million naira. Already, your 20 million purchase has become 21 million naira. Next, you need a lawyer to check the document and prepare the agreement. Then you need a survey. You may also pay for a deed of assignment, depending on the property's title and the state where it's located. There may also be government charges such as stamp duties, registration fees, and in some cases, governor's consent. Governor's consent simply means the state government officially approves the transfer of ownership for certain types of land transactions. The exact cost and whether it applies depends on the property's title and the state. Now, aside all that, you still have, Omonile to contend with, in the event that you bought the land and it's just laying idle, nothing is being done on it. Now, when you add everything together, it isn't unusual for a property advertised at 20 million naira to cost around 23 million naira or even more before everything is completed. That's something many first-time land buyers don't expect. Now, let's fast forward 5 years. Suppose that area develops well. New roads are built, more people moves in. Now, demand increases, obviously. Let's say your land is now worth 35 million naira. On paper, you have made 12 million naira cool profit if your total acquisition cost was about 23 million naira. That's a solid gain. But here's the question many people never ask. Did your land pay you anything during those 5 years? Obviously, no. Unless you developed it, rented it out, or find another way to earn income from it. It simply sat there while waiting for its value to, rise. There is nothing wrong with that. But it's important to understand how land grows wealth. Most of the reward usually comes when you finally sell. Definitely, that's called land banking. Now, let's compare that with another approach. Scenario 2, instead of buying land, you invest that same 20 million naira, not by putting everything into one place, right? That would be risky. Instead, you spread the money across different investments. This is called diversification. Diversification simply means not putting all your eggs in one basket. Here is how to go about it. 40% goes into treasury bills. That's 8 million naira. Now, what is treasury bills? Treasury bills are loans you give to the government for a fixed period of time, right? In return, the government pays you interest. They are generally considered one of the lower risk investments in Nigeria, although their returns still change with market conditions. Another 40% goes into good Nigeria companies listed on the stock market. That's another 8 million naira. When those companies do well, their share price can rise. Many also pay dividend as well. A dividend is simply a company sharing part of its profit with its shareholders. Then the remaining 20%, that's 4 million naira, right? You put that into a money market fund. A money market fund pools investors' money and invest in short-term, lower risk instruments such as treasury bills, bank placement, and similar securities. It aims to provide relatively stable returns while keeping your money easier to access than many long-term investments. Now think about what happens over the next 5 years. Your treasury bills earns interest. Your money market fund earns income. Your stock may increase in value. Some companies also pay dividends every year. Notice something unlike land. This investment portfolio can produce cash while you still own it. That cash can help pay bills or you can simply reinvest it. This is where something very powerful happens. It's called compounding. Now, compounding means your returns start earning returns. Imagine planting a mango tree, right? The tree produces fruit. Instead of eating all the fruit, you plant some of the seeds. Now you have more trees. Those trees also produce more fruit eventually. Now, what will happen over time is growth will now start happening faster and exponentially. That's how compounding works with money. The longer you leave it, the more powerful it becomes. Now, here is where the debate gets really interesting because let's imagine something unexpected happen. It's life, anything can happen, and things do happen. So, your business suddenly needs cash or an emergency comes up. Which investment do you think will help you faster since you need cash? Is it your land or your investment portfolio? Most of the time, the investment portfolio wins. Why? Because many financial assets can be sold or redeemed much faster than a piece of land. Land usually requires finding the right buyer and completely legal paperwork. That difference matters, especially for business owners. Cash flow keeps business alive. If all your wealth is tied up in land, you might be asset rich but cash poor. That means you own valuable things but don't have enough cash when you need it. Many businesses have struggled for this exact reason. But do not misunderstand me, right? This doesn't mean land is a bad investment. Far from it. In fact, land has made many Nigerians wealthy. Some people bought land on the outskirts of Lagos years ago for just few 100,000 naira, right? Today, those same areas are now worth tens or even hundreds of millions of naira. The key is that they bought in the right location and held the land for many years. Patience was part of the investment. So, which one actually win? The honest answer is it depends on your goal. If your priority is growing wealth over a long period and you don't expect to need the money soon, carefully selected land with clear ownership documents can be a strong long-term asset. However, if your priority is flexibility, easier access to cash, and the chance to earn regular income while your investment grows, then a diversified portfolio of treasury bills, mutual funds, quality stocks may suit you better. Now, here is something that surprised many people when they first learned of it. Many wealthy Nigerians don't argue about whether land is better than investment. What they do is they simply own both. They use financial instruments to generate cash flow, then they use part of that cash to buy land. In other words, one investment feeds the other. That's a very different way of thinking. Instead of asking, which one should I choose? They ask, how can these two work together? That small change in thinking can completely change the way you build wealth. So, if someone gave you, 20 million naira today, would you still put every single naira into land? Or would you want part of that money working for you every year while the rest grows over time? The truth of the matter is there isn't one perfect answer. There is only the answer that matches your goal, your time frame, and how much flexibility you need. The biggest mistake isn't choosing land, and it isn't choosing, investment. The biggest mistake is investing because everybody else is doing it without understanding how the investment works. Before you buy any land, understand every hidden cost. Before you buy any stock or mutual fund or treasury bills, understand the risk and how it earns money. When you understand both sides, you stop following opinions, then you start making informed decisions. And that's what separates people who simply owns assets from people who build lasting wealth. If you found this video helpful, share it with someone who believes land is always the only way to build wealth in Nigeria. The truth of the matter is, it might change the way they think about money and maybe even the way they invest for the next 10 years. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.